You know the thing about red days like this, I don't like them in general, but sometimes they're a blessing, and I'll tell you why they're a blessing. Not because you can buy things very cheaply, but because sometimes red days like this distract the market from big things that are actually happening. And when it does, it probably, if you can pick up the big things, because you're not actually distracted by the short-term price movements, then you can maybe pick up bargains that other people aren't seeing. And as soon as the market recovers, those bargains will recover more than any other token. And today I want to talk about exactly that, because the market's red. And there is something massive, something seismic, which is happening under the hood. And, you know, a lot of people probably missed it because you know why? Because when the markets go down, people aren't actually that interested in crypto content or don't actually pay attention. They come back here when the markets are back up, but by that time, everything's run. Today, I'm going to break down for you something seismic that actually happened. I'm going to show you exactly what I'm going to buy. And at the end, I'm going to show you my favorite token around the specific narrative that the SEC approved yesterday. And it's a very, very, very big and very, very seismic shift. So, good to be here. Especially if you're here during the red day, you know you guys are going to be the ones that actually profit in the end of this bull market. We're going to be sharing a lot of alpha today. Ranjit in the house, as Bruno says. Let's go. You know, the biggest mind shift change that you can actually make is to love the red days more than you love the green days in crypto. And I know it's like very, very, very hard because I'm in crypto and I understand exactly what it's like. And to be honest, my entire mood in a day is whether the market's green or red. If the market's green and everything's running, generally in those days, I'm much happier. And when the markets are red, generally my energy is quite miff and quite, you know, like it's not the same. But if you can have the change in mindset and you can celebrate the red days and be happy, but not be as happy on the green days, I reckon that's the way that you actually end up making a lot of money in this bull market. Don't ask me how to do that. I guess you've got to be here for multiple cycles. You've got to understand, you know, being here for multiple cycles, as we spoke about yesterday, and being able to buy hated rallies and being able to stay focused when everybody else is tapping themselves, when everybody else is like doing other stuff and not really focused on the markets. If you are still here, that's probably the best way to be able to beat this market. So really, I think what we're going to try and do is we're going to try and change our mindsets. Red days, good days. Lots of red days, very good days. And then when we get a green day, we celebrate that everything comes to fruition. So that's the challenge. That's what we're going to be trying to do. Today, I'm going to show you how a lot of people are actually missing this massive narrative because it's a red day. And what you'll notice on red days, less people actually watch the show here, right? So I want to show you something pretty interesting because I think you'll like this, and I think you guys will resonate very, very, very well with this, right? So if you go to the Crypto Banter YouTube channel, and I just want to remind you, so you go to the channel last week and you go to our videos and you go specifically to my videos. Look how much higher the views are in when the market's up. 75,000, 62,000, 56,000, 110,000. The market's up. 2 days the market's been down, the views are back down. But despite that, the people that were here yesterday, the people that watched the show yesterday, you'll know that we were calling Pump. We've been calling Pump.Fun. I called Pump.Fun in the Discord group. Now, those that were here yesterday are probably up 170%, or at least I know I'm up 170%. And I know that anybody that was in Frontrunners is probably up more than that, because I started calling Pump.Fun at 0.26. It went down to 0.22. The thesis for me was, Alon's not going to keep quiet for very much longer, right? And I also made a full show yesterday. And again, like it wasn't our best watched show. It's actually our worst watched show because there's just no interest on the days when markets are red. But if you listen to that show, you probably got into Pump.Fun. And if you did get into Pump.Fun, you'll know that our thesis actually played out exactly. Alon's back within 1 day. I just want to show you like how crazy this is. Within 1 day, all this FUD about Bonk and Pump. Who's in the lead again? Pump. 1 day. It's 3 weeks of FUD, grave dancing, people saying that Pump's dead. I mean, I have to. Congratulations to Pump.Fun for making the new all-time low in DEX trading volume, the lowest revenue in more than a year, an FDV of 3.1 billion and 182K in daily revenue, P of 46, assuming 100% net margin. TLDR, longing Pump in the face of worsening revenue and volume is like asking for anal without lube. Okay? This was yesterday. 24 hours later, And Pump.Fun takes the lead again. And everyone's happy, and everyone's smiling, and Elon's back in the trenches. Sorry, Elon's back in the trenches. It is like the Elon of the underground. Real communities. They're now talking about incentivizing communities. A Pump.Fun coin troll is over $100 million market cap. So everything's good in the hood again, and Pump.Fun is the best again, and the price has gone up. And I'm going to say this again. This is a typical crypto chart. Launch, FUD, beat all-time high. I want to show this to you because Hyperliquid had this similar thing. Not exactly. I'm going to say to you, it's not exactly the same, right? But look at the Hyperliquid launch, FUD, lows, crazy lows, above all-time high. That's why I'm going to say it with conviction. I'm going to say it here, and if not, I know you guys will cut up the show and you'll meme it. Pump is going back above 0.006. Guaranteed. I'm willing to put my money on it. In fact, I have put my money on it right here. Here are the screenshots to prove it. There are a lot of these screenshots because I've opened a lot of positions on a lot of our partner exchanges. Yeah, and so I think that our thesis is actually playing out, and congratulations if you got in. And if you haven't got in, I think Pump is amazing to be buying on the dips. I said it to my research team, I'm saying it to you guys again. There are very few times when I have so much conviction in something that I'm willing to sell from my Solana bags and switch in, because I'm fully invested in the market and I don't have any cash. So if I want to invest in something, I need to go and I took Solana and I sold Solana and actually ended up buying Pump. And so far it's been an amazing investment because that's the returns that I'm basically been getting. Anyway, so today we're going to bring you more returns. And if you're new to the channel, that's what we do here. I mean, like, I've been here for a while. This is my third cycle. I've invested in like over 1,000 companies, and now, I mean, I was an early investor in Bitcoin. I was an early investor in ETH, Sol, Sui, and a whole lot of other protocols. And yeah, today I'm going to show you another narrative, which I think we're very early on. So, sounds good to you? You know the story? Subscribe to the channel. The subscribers are exploding. I love it. 1172. We're going to go. Also, remember that we have a new video launching on the new channel in less than 24 hours, right? It's nearly finished editing. If you're not already subscribed to the new channel, if you're not one of the 4,000 subscribers, there is a link below here where you can go and subscribe on our new channel. So there's a new channel called Crypto Insider. That's my channel. That's where I'm making run videos only, not run Sheldon Carl. It's run videos only. So you click here. And you subscribe to that channel. There will be a massive video dropping, and so maybe just put the bell notifications on. It's around one of our favorite protocols. Really one of our favorite protocols. All right, let's talk about the new narrative and what, in fact, the bubbles have been distracting everybody else from. Right. So as I said, the bubbles have been a distraction today, but I think we need to keep sight of what's actually happened or what's actually driving this market. And it's very important. Very important that you understand how this market cycle has worked. So the one thing about this market cycle is there have been two bags that have run. If you take the market performance in the last 8 months or since January, there have been two real bags that have performed and nothing else has performed. Last year, October, November, December, it was meme coins. September, October, it was meme coins. Then November, December, it was AI agents. I don't know if you guys remember that. And since then, and I want to remind you that since then, we are now almost 8 months later. We're 7 months later, right? I see David text watching. Welcome, Davey. So we are now 8 months after the December boom. And when I say the December boom, if you kind of look at this market pretty much happened in two stages, right? The first stage was the bull market that took us to December. In December, we were all rich. I don't know if you guys remember. I remember I was in Mauritius. I was buying bottles of champagne like it was nobody's business. Wow, I was rich. And then, the problem is that after December, actually, it wasn't so great after December, right? So, I mean, specifically with the altcoins. So I'll take you to like Total 3, because I think that's the best place that you can see it. So Total 3 had a top in December. Here it is, right? And then since then, it's just been down. And I think most of our bags are actually down. And the reason why most of our bags are really down here is because if your bags are down, you'll realize that actually since the end of last year, in this whole cycle, you would have had to change your investment thesis. And what I mean by change your investment thesis, you would have had to stop investing in narratives. So up until now, crypto has been very much about investing in narratives, right? It's the AI narrative, it's the meme coin narrative, then we jump to the gaming narrative. But this isn't that market, right? And in fact, right now, if you want to make money in crypto, there's actually only one narrative. And that one narrative is institutional investment. And you need, the sooner you come to that realization, the more protected your bags will be. Because it's not the old crypto market. And I must say, I was also a little bit caught off guard. It's not the old crypto market. In the old crypto market, if we could sniff out that you were going from avalanche narrative to the gaming narrative, from gaming narrative to AI narrative, you could land up making money, and you'd make money on all these different narratives, right? But since December, there has actually only been one narrative. There's only been one narrative. That narrative has been institutional adoption and the Americanization or the American institutionalization of crypto. That has been the only narrative. And as a result of that, anyone who played any other narrative that didn't play around the American institutionalization of crypto basically missed out on the whole cycle. And I know some of us actually did that, right? I'm still holding some of my AI bags. But you know what? Those AI bags aren't going to run. You know why those AI bags aren't going to run? Because that's got nothing to do with the Americanization and the American institutionalization of cryptocurrency. They're not interested in that. So there's two narratives that have been running. One, Americanization and institutionalization of crypto assets. Second one that has been running meme coins. Because the thing is, it's like a barbell, right? Dumbbell, barbell, barbell, dumbbell, barbell, bell, hell. So it's like on the one side, American institutionalization, on the other side, meme coins. That's it. That's the two places you can make money in the market, right? Anywhere else, anywhere in the middle of that, it's like a sure place to get wrecked. Gaming, sure place to get wrecked. AI agents, AI, sure place to get wrecked. I don't know, all these other protocols. If it doesn't have anything to do with meme coins or American institutionalization of crypto, chuck it away. It's not part of your portfolio. It shouldn't be part of your strategy. Okay? Rest in peace, all the gaming coins, except for one, Super. And why? Because Pump.Fun was very clever. They created this narrative around institutionalization and building a DEX and getting into DeFi. So that's what's pretty much going on. And it's like, it's not only, you can see it everywhere. It's the treasury companies. You know, like what are treasury companies? Treasury companies are Americanization and institutionalization of crypto. And you can see that Pavel Durov actually commented yesterday when the Telegram, the TON vehicle launched, and he said, it's a historic milestone. For the first time, American investors gained access to TON in the US stock market. Okay? Americanization and institutionalization of crypto, and any asset that actually follow, any investment thesis that follows that will end up making money. You know, like they say, don't fight the Fed. Don't fight the narrative. That's the narrative. AI, great narrative, amazing, but it's not about it. You need money. You need a lot of money to push up the crypto markets now. Where is money coming from? American institution, Americanization and institutionalization. That's exactly what it is. Okay, so that is the narrative. You know, remember when Circle launched? Remember how it was Americanization and institutionalization of crypto, and so it went up and up to the moon, and it's coming down now. Maybe we'll buy it soon if it carries on coming down. Anyway. So that is it, and that's the narrative that's made money. And now, in continuation with that narrative, things are happening very, very, very fast. And when I say very fast, it's like happening at the speed of sound. Seismic shifts are actually happening at the speed of sound. Why? Because like 5 days ago, actually not 5 days ago, 6 days ago, the SEC comes out and says, you know what, we're actually launching this new chapter of crypto, and they basically said we're going from being completely against crypto to winning in crypto. Listen.
Today, I should like to discuss what Commissioner Peirce, Hester Peirce, and I are calling Project Crypto, which will be the SEC's North Star in aiding President Trump in his historic efforts to make America the crypto capital of the world. The SEC will not stand idly by and watch innovations develop overseas while our capital markets remain stagnant. We're at the threshold of a new era in the history of our markets. As I mentioned earlier, today I'm announcing the launch of Project Crypto, a commission-wide initiative to modernize the securities rules and regulations to enable America's financial markets to move on-chain. The President's Working Group on Digital Asset Markets released the PWG report with clear recommendations for the SEC and other federal agencies to build a framework to maintain U.S. dominance in crypto asset markets. This report is the blueprint to make America first in blockchain and crypto technology. We will
okay, so I think you pretty much get it. That, and if you look at the date of when that was launched, it was like 4 days ago, 5 days ago, right? And so we've gone from an environment where the SEC has been completely hostile to an environment where the SEC is actually promoting crypto. And I don't know if you guys remember, but Scott Bessent came out and he said, build your companies here, hire your employees here, you will be rewarded for actually doing it, right? So we're in an era where I think a lot of people haven't clicked at the rate of change. And it's like, you almost got a train that was accelerating one way. So you have, like, imagine you had a train that was accelerating one way, and then it turned around and then started accelerating the other way. So it's not like the train just stopped. The SEC attacking crypto train just stopped. It actually started to accelerate the other way and almost try to make up all the lost ground because it was traveling in the completely wrong direction. That's the environment that we're playing in. And the big question is whether you have managed to adjust your mindset and whether markets have managed to adjust their mindset to operating in this new environment. And I can tell you that I don't think that I was able to adjust my mindset to operate in this new environment. I think I understood that the SEC was no longer against crypto. I think I understood that there's a massive opportunity. But what I didn't understand is I didn't understand how quickly the train is coming back. And I didn't understand the speed at which the train is coming back. That's what I didn't understand. And I think now I'm starting to get a much clearer picture. And why do I say now I'm starting to get a much clearer picture? August 4th, they talk about this crypto project crypto. They don't even wait 2 days and they make an announcement which is seismic, like massive. The only way I can word it is seismic. And the announcement is around liquid staking. They said today's staff statement on liquid staking is a revolution, basically clarifying the SEC's view around liquid staking. And so what actually happened? Well, the SEC published an announcement, and I read the announcement. I don't think you guys need to read this whole announcement, but if you look at what they talk about the announcement, they talk about liquid staking protocols specifically, and they basically said, look, liquid staking activities as we know them are not securities. So they say activities undertaken by liquid stakers in connection with liquid staking, including their roles in connection with the earnings and distribution of rewards, slashing, minting, redeeming, and staking receipts, etc., are not deemed to be securities. So why is that such a seismic shift? And who's actually going to benefit from it? And before I actually tell you that, if you read Matt Hogan's statement, he says, the most obvious question is to ask about Atkins' vision is whether it's priced in. If markets were already anticipating the turn from the SEC, from crypto antagonist to crypto catalyst, then it should already be factored into the price. The thing is, he says, but I'll close this off with, I was off guard by the speech. I was off guard by the speech. It seems that the markets, the broader markets, and haven't yet caught onto the speech. And that's why I say it's because look, that's the 1 week bubbles, which 1 week gives us exactly the time frame where the speech was made. There's no way that the markets have actually started to price this in. And that's effectively one of the two opportunities, because there are two opportunities here. First opportunity is it's not priced into the market yet. Second opportunity is that even when it is priced into the market, we can front run the institutions because they can't invest yet. Okay, now I don't know if you understand what I've just said to you. Number one, the market hasn't priced us in. Number two, the institutions are about to start using the protocols that we can invest in, and they cannot invest in those protocols. You get that, right? But they will be able to invest into it one day. It's almost like, think about like using Amazon, but not being able to invest in Amazon. It's cool, but then anybody who's invested in Amazon just makes money off every single transaction that you make. That's exactly what's about to go on. And so I think the big question that you have to ask yourself now is, who are the biggest winners and who are the biggest losers, and why are those the winners and why are those the losers? And that's what I want to break down for you in the show, because that's really where the alpha is. And if you're enjoying the show so far, just remember, guys, help me hit the like button. Let's try and get everybody back. I know the markets are red and everybody's not watching crypto content, but let's get them back here. So who wins and who loses here? Well, I think you need to break it down by understanding exactly what this is, by the way, announcement number one of a whole lot of different announcements that I think are going to be made in the next couple of days. So the first announcement, who is it good for? Well, we agreed. What the SEC has basically said is, it said, if you do liquid staking, then that's not a security. Now, up until now, you almost want to think to yourself that all the liquid staking protocols had this gun to their head. And they never knew if they were going to get shot at or not shot at, right? Because is this a security? Is it not a security? We're not so sure whether or not it's a security. Now there's no more. Now it's not a security, and the gun's basically gone, and they can continue to operate without this cloud over their head. And by the way, we'll talk about a protocol called Cloud later. But without this cloud over their head as to whether what they're doing is legal or illegal. And that is a massive, massive, massive anxiety. You know, imagine that you were working every single day and you had this thing of like, is this illegal? Can I get arrested? Or is this not illegal? You never knew, right? Well, now you know it's not illegal. And so who lands up benefiting from it? Well, the first people that land up benefiting from this by far is the protocols themselves. And specifically, I'm going to allude to two protocols. The first one is ETH and the second one is Solana. Okay, so why? Why do ETH and Solana land up being the biggest gainers here? Well, the thing here with ETH and Solana is that, with ETH is that ETH is the only ETH and Sol, but Solana, the ETF, is not yet approved. It should be, the real ETF should be approved pretty soon. But the ETH ETF right now doesn't allow for staking revenue, right? So in other words, if you invest in the ETH ETF, you invest, but you're not getting the staking revenue because the ETFs are not allowed to stake those tokens. Now you may say, okay, well, the staking revenue is not so big, right? But for Wall Street, yield generating assets are far, far, far superior to non-yield generating assets. Now, the worst asset that you can have is an asset that is a yield generating asset that is dilutive because it brings more tokens out, and that you can't participate in the dilution and you cannot participate in generating the yield. That is, I would say, the worst case scenario. If you're in that scenario, like you're in the worst case scenario. And that's really, if you're holding the ETH ETF now, you're in that scenario. Okay, you're in that scenario. So the first winner here, and the biggest winner here, I think, is the ETH ETF. Why? Because now BlackRock and a whole lot of others have actually applied to the SEC to allow for ETH staking in their ETFs. And now that the SEC has said that liquid staking is actually allowed, we're one step away from the SEC saying, look, all your ETFs that want to do staking, you got our blessing. You can actually you can actually go out and you can actually do staking. So the biggest winner here, I think, is ETH, and the second biggest winner here is Solana. Why? Because I want to just show you what happens to the returns when you start. So if you invest $10,000 in Bitcoin, and I'm just for now just saying, let's just assume that the price of Bitcoin remains the same for 5 years. Ridiculous assumption, but let's just assume that for now. Over 5 years, you still got $10,000 worth of Bitcoin, right? With the ETH and with ETH staking, and assuming that the staking remains low at 3%, which is kind of where it is today. And if you want to know where to get that, you just go to stakingrewards.com, and you can see that right now it's 2.9%. So what you can see is that if you invest $10,000 in ETH and you get staking rewards, because it keeps compounding, after 5 years, you end up making 15.5%, right? And when you go to higher yielding assets like Solana, for example, what you can see is because the staking rewards on Solana are much higher, they're about 8%. What you can see is that if you invest in a Sol ETF and the Sol ETF actually allows staking, if the price doesn't go up, you make 50% over 5 years just on the staking rewards. So I guess you understand now that the biggest winners here are actually the protocols which have staking rewards, because now all of a sudden, and it's going to happen very soon, the SEC will approve staking in ETFs. So that is the first bunch of winners. The second bunch of winners are the liquid staking protocol. Now, for those of you who don't know what a liquid staking protocol is, it's pretty simple, right? If you want to stake your assets or participate in validating on the network. So I'm going to take a real step back here. For those of you who really, really don't know, if you own ETH or Solana or any other proof of stake asset, and you can pool these assets in a validator node. And a validator node is what approves transactions on the proof of stake network. Now, if you have these assets and you stake these assets to become a validator, you earn staking yield. The only thing is that instead of you actually running this node, this validator node and staking, there are certain protocols where you actually give them your ETH and they run the validators on your behalf, and they give you a staking reward, and they take a very small fee for actually running the validator rewards. And it's very, very, very much worth it, right? And so you have a whole lot of really big protocols that do this for people, right? So long story short, who are these big protocols? Lido is, I think, the biggest one. It's got $32.7 billion in total staked assets. Then Binance take deposits for people on the exchange, and you stake it with Binance, centralized, obviously, and you land up, they've got 11.57 billion worth of ETH. Then 𝗤𝗄 is the biggest staking protocol on Solana. Then you got Rocket Pool, you got Sanctum, which we'll talk about in a second. You've got Cloud, you've got Marinade, and a whole lot of others basically over there. So, I mean, if you look at it like this, these are the biggest staking protocols on ETH: Lido, Binance, Coinbase, 𝗤𝗏, Figment, Kiln, Kraken, etc. And then there's the same scenario actually on Solana. Now, the thing with these staking protocols is that they're not these like airy-fairy, we're not sure how we're going to make money protocols. It's like pretty simple how they make money, right? How do they make money? They stake your assets in the validator yields, in the validator nodes. They earn for you 2.9% and 7.2% and more or less the percentages. And whatever they claim for you, they give you a very small, they cut a very small percentage of it and a fee for actually managing this process on your behalf. And that's how they generate yield. These protocols land up being some of the most profitable protocols in crypto. So if you look at the most profitable protocols in crypto, and this comes from the June.com, do your own research crypto cash cows, you can see that some of the biggest revenue generating protocols after the DEXs, which by the way we love, are the liquid staking protocols. You can see Lido is over here. You can see Camino is over here. You can see 𝗤𝗏 is over here. And so these liquid staking protocols actually land up making a lot of money in crypto for actually doing this, right? And so the biggest, probably the second biggest winners, other than the chains here, is the liquid staking protocols themselves, right? Because now, all of a sudden, number one, all these ETF providers are going to start staking. And the question is, where are they going to start staking? Well, they can either run their own nodes. I don't think a lot of people are going to run their own nodes. Or they can start staking them in places like Lido, 𝗤𝗄, Binance, Rocket Pool, if they want a centralized option, Binance, etc., etc. And so this then makes it the second biggest winners in this thing. And so I want to talk a little bit about the actual staking protocols, because I told you I'd bring you some real. I'm gonna bring you some real alpha here today and show you which ones are really, really, really undervalued. So let's talk about who the players are. Lido is the biggest staking protocol on ETH. Funny enough, they actually shut down their Solana staking when there was so much FUD. They didn't make money out of it, and they shut down their Solana staking when there was so much FUD. I guess they probably regret it now. That opened the grounds for 𝗤𝗄 to come in, and 𝗤𝗄 became, not only did they become the biggest staking protocol on Solana, but they also came up with a way to capture the MEV on the chain. And when I say the MEV on the chain, for those of you who don't understand, MEV stands for minor extractable value, maximum extractable value. And what that stands for is the best way to order the blocks and to capture the value for validating the transactions. And so, basically, though these are effectively the biggest protocols, and I'm going to show you which ones of them I think are undervalued or overvalued. So again, you can see it here. If you go to June and you go and look at them, Lido, 𝗤𝗄, Sanctum, Rocket Pool, and we carry on going down, Marinade, etc., etc. So let's look at these guys in terms of all the metrics, and it's not a fair comparison. I'll tell you that it's not a fair comparison. Why? Because you cannot compare 𝗤𝗄, which captures MEV, to Lido, which doesn't capture MEV. It's just not a fair comparison, right? 𝗤𝗄 captures the most value across all Solana transactions, and Lido doesn't actually do that, right? So let's talk about which ones of these are over and undervalued. So here's the fully diluted valuation, which is probably what you should be looking at. Then you got the staked value. So 𝗤𝗄's got 2.6 billion. Marinade's got 1.79 billion. Cloud's got 2.2 billion. Lido's got 32 billion worth of stake. Eigenlayer's got 17 billion. Eigenlayer is slightly different. We'll talk about that in a sec. And then you got Rocket Pool. Then here you've got the fees earned. So 𝗥𝗏 earns $537 million worth of fees. Marinade earns $148 million worth of fees. Cloud, etc., etc. This translates into a certain revenue for them. This is the revenue that these make. If you look at the revenue to fee ratio, so the revenue to fee ratio is given to you over here. And then you look at the FDV relative to the fees. And that is effectively what I think is the metric. It's for me, it's FDV divided by revenues. So if you got FDV divided by revenues, you're saying what is the total multiple of revenue that this protocol is actually trading on, right? 𝗥𝗏 is slightly overvalued because they capture MEV as well, but the rest of them are trading at about a 10 to 13 multiple on their revenues, right? On the revenues that they're actually creating. And so if you look at the ones that I believe are probably slightly undervalued is if you look at, like, for example, if you look at cloud, right? So you look at cloud, the market cap to the fees ratio is probably the lowest in the whole market at the moment, right? And so effectively what you want to be doing is you want to be looking at these liquid staking protocols. You want to be saying, look, how much are they earning? You want to extrapolate the fact that they're going to earn a whole lot more. And the reason why they're going to earn a whole lot more is because now all of a sudden there's a green light for staking, and what they're doing is actually completely legal, right? And so and you want to start valuing them. Now, I think that the probably the one that is the most undervalued at the moment for me, based on its market cap, not its fully diluted valuation, is Sanctum. Why? Because they make about $5 million worth of revenues. And if I look at their fully diluted valuation, it's about $81 million, right? So what's the ratio there? So 5 million, 81 million, 13 times. If I look at something like 𝗏𝗏, they make 100 million. Okay, that's a massive protocol. Let's look at Marinade. Marinade's making 9 million, and their fully diluted valuation is, yeah. So I would say all of these guys that are trading like 10, 11, 13, those are probably the cheap ones to buy. Like, to me, if you said to me, look, buy a crypto company at about 10 times its revenue, I'd say, oh, that's probably a good place to be. And so where do I think the play is? I think the play is to start investing money into 𝗥𝗏, Marinade, Cloud, and 𝗏𝗏. Why? Because they actually haven't started going up yet. They haven't yet responded to the news, and the institutions can't really invest in them. The institutions actually can't really invest in these because how? There's no ETF. There's, how are they going to put money into 𝗥𝗏? But they're going to land up using it because they have to land up using it because that's where they're going to be staking pretty much all their assets, right? So that's the thesis for me. A lot of people are saying that 𝗥𝗏 is undervalued. I must say, I pretty much agree with you that 𝗥𝗏 is undervalued. And I looked at this chart this morning. I was like, holy shit, the last time I bought this, it was at $2.20. And I thought I was getting myself a good buy, but then the market actually came down. And so why is this protocol trading so much lower? Well, right now in 𝗥𝗏, there's a proposal, which is called JIP24. And what this proposes is that all the fees that they get, instead of investing it into the 𝗥𝗏 company, which has been developing the protocol, it now goes into the DAO, and the DAO decides where to actually allocate those fees. And what some people are actually worried about here is that they reduce the sustainability for 𝗥𝗏 Labs' development. But for those who are into decentralization, this is a brilliant way to actually say, look, it's decentralization. So 2 tokens that I'd land up buying, or I land up buying a lot of, 𝗥𝗏 and Cloud. And I do personally hold a lot of 𝗥𝗏 and I hold a lot of Cloud. Why 𝗥𝗏? Because it captures the MEV and it captures the staking rewards on Solana. Why Cloud? Because I just think it's one of the strongest protocols. It's really past. I mean, I read this about them. I don't know if I've got it here, but they really like, they're the clean guys. Like, just listen, you can kind of read it over here and you can say, quarterly report, they published their quarterly report. One of only 2 tokens to achieve a perfect score on the Blockworks token transparency audit. By completing all the cloud audit movements from the team and wallets are now documented. It's just one of the cleanest protocols that's going to start generating a lot of revenue, and you're still getting it pretty cheap. So that's the thesis. That's where I think we can front run the institutions, if that's your thing. And it's definitely my thing, is to front run the institutions. Cool. Let's talk about some other things today. What else is happening today? So I think the other thing that we need to talk about is the bots. So the 𝗤𝗏𝗽𝗏 bot and the 𝗏𝗏𝘀𝗀 bot are trading again. So I saw that today. They've actually opened a couple of trades. Remember that they were they were they did very well when the market was going up because they are directional bots. And then when the market started going down, obviously they started doing quite badly. And the one is at break even and the other one is slightly down. Now, again, if you guys exit now, then you guys are basically the guys that exit when the markets are red. These are directional bots. They're going to do better when the market actually goes up. Then lastly, I'm doing another bot trading workshop for those of you who want to do grid trading bots. I did a one on Monday, which was really, really, really fantastic. In 25 minutes, in other words, at wherever you are now, at 30 past, at half past, we're running another one of those workshops. Now, there's a link below over here. To this Zoom link below. Go and register on that Zoom link. And at 25 past, which is in 20 minutes, we're going to start another free bot trading workshop. I'm going to show you exactly how to trade the bot. I'm going to show you exactly how to get out of the KYC. I'm going to show you exactly how you can land up programming the bots so that you can actually land up profiting. And I'm going to show you how you can copy the trades on my bots if you want to copy my bots. Absolutely free workshops. I do suggest though that if you come, have an account open on Pionex. Use this link over here. You'll end up getting $1,000 deposit, up to $1,000 deposit bonus. And then let's meet again in 25 minutes at the bot workshop, so that instead of me saying to you, trade well, my friends, I can just turn to the bots and say, trade well, my friends.